Hi, everyone. Welcome to Mish's Market Minute Stock Charts TV. I am your host, Mish Schneider. Thank you, Stock Charts, for allowing me to do this with you every week. It's been tremendous amount of fun for me in that I actually get to come to you each week with a lesson and some good actionable information. And this week, what we want to cover is consumer staples. All of a sudden, for something in a sector that has actually underperformed the rest of the market, XLP, which is going to be the ETF we'll look at momentarily, up about 20% year to date, as opposed to looking at something like the Russell 1000, which is up over 40%. It's an interesting time to be looking at them as a potential not only hedge for inflation, but also a possibility considering many pay dividends, and what could possibly also be for a stagflation environment, a place where people will go. So let's talk a little bit about what consumer staples mean, because there's a difference between staples and discretionary. Consumer discretionary are considered cyclicals in that you want the economy to be doing well, whereas consumer staples are actually non-cyclical. So very often they can be stable regardless of what the state of the economy is. So like everybody needs food and beverages and household goods and hygiene products, and well as alcohol and tobacco, those people who need that, no matter what the economic situation is. And so essentially, historically, in downturns, they've been good. It's not a guarantee, and we have a couple of interesting caveats to watch for before we say definitely go out and buy every consumer staple that there is. Number one is some of them may actually wind up being impacted. So there's three ways that companies that are staple companies like a Procter and Gamble take their profits and deal with them. Number one is they may take their profits and actually reinvest in their own company, or they may pay more dividends, or they may do stock buybacks. Assuming that they're going to pay dividends, obviously you want to stick to the bigger companies, especially ones that have good revenues and good profit shares. And people will say buy and hold these to sort of weather a storm and offset losses. I would say that if we have a super steep correction in the market and the stocks drop, the company could also always be at risk at lowering the dividends or stopping them altogether. So like everything, it's always going to be a matter of risk reward. And the other caveat is that if inflation and the cost of goods get much higher, particularly as we're talking about things like cotton and food and sugar and corn and wheat, that would actually possibly affect the bottom line for some companies. So here's the list of symbols that we're going to cover. Of course, I'm always super ambitious in terms of how many symbols we've got here. Most of these pay dividends, not all of them, but they definitely cover the whole spectrum of everything that we need to live on a day-to-day basis. So let's go to the charts. So the first one we're going to look at here is XLP, which is the ETF. And what's interesting is the timing of doing this lesson with you, because you can see that we've actually come back over the 50-day moving average after having some kind of a correction. And we're getting the confirmation of the phase change back to bullish as we now look like we're going to have a second close over the 50-day moving average. Also, it looks like we just about now, I was going to say we had an inside day. This high was 70.76. Yesterday was 70.74. Not an inside day, but nonetheless, it's doing well. And if we take a look at the momentum, of course, we're still in a divergence in that this is above the 50 and well above the 200. This is below both moving averages, but at least the momentum is increasing here. So I wouldn't get too worried about that. What's more interesting is if we take a look at the leadership, this has not had any leadership since it's done all of this sideways work. And now just today is starting to flip a little bit over the benchmark, while we're seeing the S&P 500, as I'm speaking to you, down about 0.65%. As we just said, XLP is actually up on the day slightly by 0.14%. So that would be one thing to look at. Of course, if you're going to buy the XLP, you're not going to be getting any kind of dividends on that. So let's go through some of the typical companies like Procter Gamble. So Procter Gamble These are all products that we need on an everyday basis. We can see now, though, in terms of risk reward, we're getting right into all of the resistance that we had here recently. At the same time, we've definitely cleared the support. Momentum is looking good and leadership is definitely there. So how would I look at this one? If we're getting so close to resistance, generally speaking, I will wait for that resistance to clear. And by the way, if you go back here, we're sort of in that same level, just a little bit higher. So I would say at this point, if we take a look at 139.10, we're so close. That's what I would wait for. And then if you want to sit with it as a position, and this is a dividend paying stock, then you could probably risk down to under the 50. If you want to do it as a more active trade, I would say probably you want it to, well, you know what? Take that back. Just do it if you're going to do it and risk to under the 50-day moving average, because that makes the most sense. The next one is General Mills. And so couple of things about General Mills is obviously we talked about food, but remember that caveat that I mentioned to you about inflation and the price of food. I was reading a story recently that Betty Crocker had to raise their prices so much that they're worried now that it's going to really affect their bottom line in terms of profit. With General Mills basically doing food, you could see that reflected as opposed to what we just looked at Procter Gamble. You've got a low here, and then this was a 60-day low. Let me just make sure that's true. This here was back in March. Yeah, this was here in August. So this is definitely a new 60-day low reversal. So that was good through the 200. Now we've come back and test that level. So it's possible that this company is assuming at this point that the food costs are already priced in, but we can see that we're not quite ready there in the momentum. We definitely want to see that take out the 200, and we're not seeing leadership yet. But I would say that probably for me, this would be getting a little more interesting over 60. This is not a big, fast, volatile instrument. And if it can get back over 60, then I would say you have a choice of risk to under 58, which probably makes the most sense. Or if you wanted to risk to something closer, you can risk to like 58.50 right here. Next one is Pepsi, which reported earnings, which reminds me, by the way, any of these companies that we're talking about here, you want to make sure you understand the earnings date, not buy right into earnings. But look what happened after earnings. Pepsi just went skyrocketing. So this is a typical example of a consumer staple and a soft drink that people are turning to, especially if times are going to start to get any harder. Now, a lot of you, I understand, love these sort of momentum trades where I've been showing you things going to new highs, and you like that's the point where you want to get involved. And I say, fine, as long as you understand your risk. And to me, 150 would be the level that I would want to see hold at this point. Where could we go? Well, as we're going on to new highs, of course, uncharted territory, we have no idea. Now, Bunge is another food company, and like General Mills, not doing so great compared to what I just showed you with General Mills, for example. But nonetheless, we did also have a new 60-day, no, let's see, before I speak. Yeah, we had a new 60-day low here, an inside day, and it looks like maybe it eked out a higher closing, but not by much. And since then, it's been coming off. Look at our momentum week in this week. So this probably wouldn't be my favorite one to go to, but it would be something that pays dividends. So what I would like to see is what happens here. This low is 74.89. This low is 74.81. If we can't break under 74.80, and it starts to turn around and say takes out 77, 78, then you might have another opportunity. Otherwise, I would let this go and see what happens if it gets closer to the 200-day moving average. Another one is Graham. This is more of a convenience store. So this is consumer discretionary, but it also sells food. And so it's interesting that when I did a search on consumer staples, this actually came up. So, because it's really not listed as a staple, as a discretionary, as what I mentioned before, more cyclical. So therefore, I'm not surprised to see this breaking down under the 50. What's so great is I've talked to you about this over and over and over again, is how well the real motion can tell you not to buy things as they're going up, particularly when they start to break down in momentum, as we see here. While it was still on the highs, it was already breaking down under the 50. So if we put a flip on that, then we want to at least see this back over the 50, and we also want to see this get back over the Bollinger Band. Now, perhaps one of my favorite of the bunch is Kroger. So Kroger is definitely a consumer staple. You can see that it's moving up here. I'm not sure when it reports, but the momentum finally has gotten going and it's just about to take some leadership. But if we just go back to the chart, it's the same kind of thing where we have a lot of resistance up here around that 40 level. So at this point, with $1.25 away from 40, you could do one of two things. You can buy it, but get out quick. If it breaks down under 37.85, let's say, it would be risking about $1. Or you can wait for some more strength and particularly look at your earnings date, get in this through 40 and then risk a couple of dollars to see what it's got. You can see up here, it was at 42.50 in the beginning of the year. Now, Target is another one of those momentum stocks. This thing has just taken off like crazy and now is going a little bit sideways. And remember, things can correct in price, but they can also correct in time. What you don't want to see is the momentum starting to wane on this high flyer. So make sure to either get your plug in for real motion to keep an eye on it, or ask me if you'd like. But right now, the dotted line here, or the Bollinger Band, has to hold while this is at lofty levels, or I would start to feel that maybe Target is not necessarily the best place to be. The next one is also convenience stores. This is Casey's General Store. Now, again, listed as a consumer staple, not doing so great. No reversal pattern here to speak of, and terrible momentum. So this would be one that I would not necessarily look to get in right now. However, if we can get back through the zero line, which right now cross-sects with the Bollinger Band on momentum, and we start to creep back up over the 200, that could be a good one going forward. Now, Sam, which is beer, Boston beer, it's trading at over $900. I mean, it's just crazy. And it just got a death cross right here. So again, as a consumer staple, not doing so great. And that's where the inflation has to come in. If people are going to be protecting their money, are they going to be buying things they don't necessarily need? Now, of course, some people would say, I can't live without my beer, and other people might. But nonetheless, I think right now we're not seeing this as any great flight for consumer staples. However, a day is young. As I'm talking to you, we did get a new 60 plus day low here. And if it holds 900 and let's say it closes over 950 or 946, that could be interesting. If not, I'd probably wait for a legitimate new 60 plus day low with a confirmation. And if you don't remember what that looks like, you can watch the video from July 8th where I do that. July 8th, July 9th. Next one is CRL. This is Charles River Lab. Now, this is healthcare biotech. So biotech, I think I've talked about this when I've talked about the Modern Family. It's both a cyclical and a non-cyclical. People actually really do need their drugs no matter what type of economy we're in. And certainly you can see how this has been reflected here, going straight up, now getting a little bit of a pullback, but not by very much, kind of gentle. However, momentum waning. So again, maybe if you were interested in this, I'd keep my eye on it. But at this point now, I would want to see the Bollinger Band cleared once again in momentum before I would get too excited about buying these lofty levels. It's one thing to buy a momentum stock when it looks like the momentum is flying equal to the price. But when the momentum starts to wane and the price is high, generally that tells me to stay away. Now, Walmart is another one. Now, Walmart actually came and made a good move earlier in the day, clearing both the moving averages, just starting to eke above the 50 in real motion and showing some leadership here on the bottom chart. but not able yet to get through here. So it really needs to clear these levels right here, which is 142.58. The high of the day I'm talking to you was 142.63, but it couldn't close above it, or at least it couldn't stay there above it. So I like Walmart. I think that you had a good 60 plus day low here. And so I wouldn't risk all the way down here, but I would say now that we've cleared these moving averages, you want to look at the low of the day when it confirmed. And believe it or not, that would be a good risk under 139, figure under this low 139.80 if this does indeed set up. Walmart is getting also into the drug space with its generic insulin that it's administering to people who need insulin. The next one kind of like that is Costco, only Costco has just gone ballistic. So any of these discount wholesale companies like BJ's and Costco could also do well in this time. One of the different ways to protect yourself in inflationary times is to actually buy in bulk, which is something that you can do at Costco. And what's so amazing is we almost had a reversal pattern here with an inside day after a new high, but it didn't confirm. So at this point, again, maybe you'd want to wait for it to clear 414.35. And if you'd like to play momentum trades, the momentum is good here and the leadership is good. So Costco, again, watch your earnings, but still on the radar. Next is Philip Morris. Now, I know this is under tobacco. What's interesting about Philip Morris is they're also trying to do a little bit more branching out into different things, but they've also gotten into alcohol through the years. And there's rumors that they're getting into cannabis, should it ever get legal. You did have a reversal pattern here after you had the high of 153. So about $10 move would have been down to 90. We didn't quite get that. And the momentum is certainly weak. So I would be cautious about paying up unless we can get through this high at 153, which of course negates the pattern that we see, but you want to make sure your momentum starts to improve as well. And another one in that space is Altria. That doesn't look quite as sexy as Philip Morris. The momentum is down here, so we'd want to see that improve a little bit. But also just plain old phase change type trading. You want to buy this once it clears over the 50-day moving average for 2 days, and then you can risk to under whatever the low is that day. Another one, of course, is Colgate Palmolive, another staple company, cleared the 50-day moving average convincingly day before, getting some follow through today, but look at your momentum, not so great. So maybe it could do a little bit more work. I'd want to see maybe some consolidation here, giving this a chance to break out over the 50 on the momentum. And then you have a pretty good risk, let's say, to underneath these lows or under, let's call it 82, to see if this is going to go up. Look at all this big resistance we've got up here at around 85, something to be aware of. Next one, I've given to this one before, playing this a few ways, the back to normal trade with lipstick trade, et cetera, et cetera. Interesting that Estee Lauder is also considered a consumer staple. I certainly would agree with that. Makeup, my God, doesn't matter what the economy is doing. But nonetheless, let's see here what's happening with the Bollinger Band on the momentum. New highs, momentum waning. That means don't chase it right here. You did have a little bit of a gap up, which is good, but I can tell you right now, if it breaks down under 323.41 or under that gap, I'd probably be a little bit more cautious on the basis of this momentum. But if it takes out the high of yesterday, 326.77, and you wanted to have a tight risk, that's what I would risk to, would be under 323.41. Next one is Walgreens. And you can see that Walgreens has actually come off here, which is so interesting. So to me, I see opportunity when this happens. Of course, we want to see the momentum clear back over the zero line, but this looks like to me like maybe we're in the making of a new 60 plus day low. If that's the case, it's right around the 200, which means I would look for the confirmation that I explained to you in last week's video on what a reversal looks like, and then you might get a really tight risk in another consumer staple company. Now this one, Monster Beverage, I found to be very interesting in that it took out the 50-day moving average this week. It's getting an inside day today. It looks like it wants to break over the 50 here on the Bollinger Band. It's already showing leadership. So this also might be one of my more favorite stock picks. Very simple. If it takes out 93.50, you can risk to under 92. And I like this one. I don't know when it reports again, but again, as a staple in the beverage industry, this could be a very interesting play. Maybe one of my favorite I've shown you so far. Now, Tyson Foods is another one that's been plagued with problems with meat contamination and supply chain disruptions and on and on and on. But it just did make a new 60 plus day low. I believe, let's see, this low was 70.68, this low. Yeah, as I'm speaking to you. So with a new low of 70.66, so close to the 200, we would need the next day confirmation or a move over 71.41. And then that could be another one. Maybe all of their issues are done. It could do well. Of course, supply chain disruption can still continue to plague them. And the next one, the same thing, ConAgra brands. This also made a huge move down, but look at this, getting the classic reversal pattern as I'm talking to you with your low here of this one at 33.30, now trading 34.69. If it closes obviously above 34.17, which it looks like it's going to at this point, now you have yourself a 60 plus day moving reversal type pattern. You can risk to under 33.30 and see maybe you can get up to 37. I don't think I'd get too excited, but up to 37 would be a good profit target. Couple more left. CLX, Clorox would be another one. And this too had a new 60 plus day low reversal pattern right here. And now is getting over the 50-day moving average after testing it, never breaking it. So this looks good actually right here. Obviously new risk, you're not going to risk all the way down here. So you can simply risk for this low here at 178.05. and see what happens with this. So I'm going to write this one down too. I like to write down the ones that I see that look interesting to me. So Clorox would be another one. And then three more left. Next is Smuckers. With Smuckers, again, underperforming here, not only close to this leadership, but not quite through, but even in the terms of the real motion, although it's starting to come back through the 200, I'd like to see it break this Bollinger Band. You didn't get anything sexy like a new 60-day low, but at this point now, the drill generally with these type of stocks is just to wait for two closes over the 50-day moving average and then risk to whatever the low is of the day that it clears it. Next one is BYND. Now, BYND is not necessarily considered a consumer. Oh, it is considered a consumer staple. I put this one on here partly because of my own consumer instinct. I made spaghetti and meatballs using meatballs from BYND. And my husband, who is a carnivore, could not tell the difference between a regular meatball and a BYND beef meatball. That's a pretty good testimonial right there. Question is though, where are we going to get in? You can see it's broken down. It's under the momentum here, under the 50, well under the 50 here. And of course, we couldn't possibly get a new 60-day unless we broke down under all of this, which would be pretty dreadful because it's not 60 days since, right? This was here in May, June, July. Well, actually, you know what? Now that we're heading in, it is actually 60 days. So let's watch for a 60-day, maybe low reversal here. Ideally, it would be a 60-day low reversal and then a move back over that 50-day moving average. But I still think longer term beyond meat is a good thing, especially if we get into any kind of issues with beef and supply chain. And the last one is chocolate. Now, in rough times, people do turn to sweets, sugar, which is doing very well. I've certainly talked to you all enough about commodities and soft commodities. But also, we can see here that Hershey demand, chocolate demand has gone up tremendously as people are still under lockdown in certain parts of the world. And we just made a new high as I'm speaking to you. So what do you do in a situation like this? Again, you have to pick a risk. I'd probably say I would look at something under 174.90. That's a little less than $5 from here, but this thing can continue to move up. The momentum isn't exactly as high as it should be when it was here and now the price is higher. But nonetheless, if you look at these as more active trades, and those of you who like these momentum trades, these are the ones that will keep going if they're set up and they're in the right trend, as opposed to something like I just showed you with Monster is just changing trends, or something like Clorox, which could be just doing a new reversal after being beat up. So you got a lot to choose from here in a space that could be extremely interesting as we move into a consumer staple environment. And don't forget about that XLP also doing very well. Okay, thanks so much for watching, and bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.